Hi, you're watching Stefan Livera podcast, brought to you by Swan.com. Today we're talking about tracking the new Bitcoin ETFs. So, as you know, these new Bitcoin ETFs were approved and launched a couple months ago, roughly, and there's been a lot of movement in which ones have been popular, which ones have not been popular. Thomas Fahrer from Apollo joins me to discuss and analyze the ETFs and what they mean for Bitcoin as a market. And now on to my chat with Tom. Tom, welcome to the show.
Thanks, Stefan. Happy to be here.
So, Tom, I hear you've got a doctorate in Bitcoin bronomics. Tell us how you got that.
That is a self-proclaimed title. Obviously, means nothing. It's just a joke.
Yeah, I mean, obviously, what I'm really asking is how'd you get into Bitcoin? What was some of your learnings of going over the cycles?
Yeah, sure. Look, I first discovered Bitcoin about 10 years ago. I was doing a internship at the Australia's central bank, the RBA, which actually is it's kind of, I guess, general advice for people is sort of be mindful of who you listen to, because I discovered Bitcoin at the time, but I didn't really get into it too much just because every person that I talked to about, although I was fascinated by it, but every single person I talked to about it told me it was going to zero. Obviously, as they would still today.
Wait for the news articles. Ex-central banker was excited about Bitcoin in 2014.
Yeah, but then I did my university thesis on it after that internship. Anyway, just love studying. It was very interesting. You know, it's like a super high volatility asset. Certainly, even more back then. And that alone, just from like the statistics, the maths angle of it, found it very interesting. Like I was studying like, what's the tail risk of it, or how do you hedge it? I was looking at like Litecoin, or whether merchants can accept Bitcoin and then kind of hedge their risk shorting Litecoin and all this kind of stuff. But then I finished university, went into the kind of traditional finance world, sort of forgot about Bitcoin for a couple of years, and then really kind of, I guess, Bitcoin never goes away, right? And it's a lot of people need a number of touch points to sort of really get into Bitcoin, and I certainly did. And I kind of, when I first saw it, I thought this is going to be like this big future world money, or it's going to be nothing. And at the time, I was like, my sort of eventual conclusion was it's going to be nothing. And then over time, I had to kind of reevaluate my perspective, obviously. And Bitcoin is, like, my experience with it is true, I would say, for literally, I've never met anybody else that had anything different, which is to say, you discover Bitcoin, you ignore it, the price goes up a lot, and then you have to have the kind of painful experience of sort of just rejecting your ego and accepting it at the price you can get anyway. And then, fast forward a number of years, obviously personally investing or whatever, but then a couple of years ago, co-founded Apollo with two partners who sort of a Bitcoin-based discovery platform for Bitcoin products and services, and really just now completely focused in my life, 100% focused on Bitcoin, and that's what we do. It's what we think about. What I do, certainly.
Great, and I know you guys have an ETF tracker there at Apollo, so let's get into a bit of that. So the ETFs, launched early this year. There was a lot of excitement around them, but there was also a lot of talk about it, right? Would they be priced in? Were they, was it overhyped? Or there's already a Canadian Bitcoin ETF. That was the line some people were saying. What's it been like for you as you sort of zoom out and look at Bitcoin ETF approval?
Yeah, well, I think I might have had a somewhat of a unique vantage point. Not unique, but I just had a vantage point on it because I sort of came from the traditional financial world where I was working in investment consulting for a number of years, and I sort of have an idea about how institutional investors look at investing their assets, kind of like pension funds and these sort of thing. And I knew, which, look, I'm certainly not the only person that knew this, but understood that this ETFs were a very, very big deal because it unlocks it removes the friction for these investors in a way that they just never would have even considered buying Bitcoin previously simply because they don't have a vehicle. Like, it's as simple as that. And if you're a big investor, I know some people think, oh, but look, you can buy MicroStrategy or something like you can allocate to that. But the reality is that if you're a significantly large investor, you can't allocate to one company. That's far too risky. It's not something that any kind of endowment or pension fund can do. They can't put 5% of their portfolio in MicroStrategy. It's not a viable investment vehicle for them. Like a retail investor can do that for sure, but it's not a vehicle for any sort of real capital. But these ETFs are. They actually fit. If you want an allocation to Bitcoin, in terms of like a serious allocation for a pension fund or an endowment or an insurance fund, these ETFs provide a vehicle in a way that has never previously existed. And obviously, they could have held it. They can actually just hold their own private keys. I understand that's possible, but it's just very difficult. It's very difficult for a board to wrap their head around that. Even frankly, if all of the individuals on the board are Bitcoiners, which almost certainly they're not, or they're varying degrees along the way. But for an investment committee, it's just extremely difficult to invest in the asset historically. And then all of these hurdles have just come tumbling down, basically, with these ETFs, and it's just going to unlock an incredible wall of capital. In the US, I know, like, for example, this is something that has been shown actually, even for years, even in the pits of the bear market, there would be these surveys that go out to traditional financial advisors and ask them their interest in investing in Bitcoin. And they would always come back and say, yeah, actually very interested in investing in Bitcoin. And not many people paid attention to it because, actions are more important than words. And these guys weren't allocating to Bitcoin. They say, yeah, we're interested, but, nothing's happening. And now it's available to them, and now they are jumping on it. We were seeing, 10 billion in flows, roughly, whatever, in the first 2 months. But there are just financial advisors in the US. They're managing 8 trillion in assets. It only takes such a tiny percentage to really move the needle on the Bitcoin asset because it's such a small dot in the ocean of financial capital out there. And sort of these estimates are some of the estimates I've seen are looking at, say, 70% of them want to allocate, and they're thinking about 2 to 3% allocation. And if that happened, you'd be looking at, say, $300 billion of capital flowing into the ETFs over a couple of years. And it takes time because these people, if they're institutional, they have to do board meetings and investment committee meetings and this sort of thing. But what happens is it just happens slowly over time. These meetings that come up, and the capital just dribbles in or comes at what appears at a wrap. It's dribbling in from the perspective of 5 billion a month. It appears from us watching the market, it feels like it's an ocean flooding in because it's very exciting. But from the perspective of the total capital outside of Bitcoin, it's really dribbling into these ETFs. But it's creating this kind of ocean swell of another Bitcoin bull market, which is just frankly, really exciting to watch this thing that, a lot of us have been really focused on for a number of years.
Right. And as you also were touching on there around the compliance hurdles that some of these firms will have to go through, they might be doing some kind of risk review thing, and then they might have to take it to a certain committee or get it approved here, get it approved there before they're allowed to actually do things. The other element is some of these large players will add it to already existing portfolios or funds. Like if BlackRock or Fidelity were to add it to as a default, to these funds that people are already in, that's going to sort of set up this whole new round of not just like a one-time shot of capital, but just kind of ongoing, steady purchases. So that's another, I think, interesting angle that, a few people are talking about, but maybe that hasn't been fully realized yet.
Hasn't been unlocked at all. And it's especially important when you think about the context of there's kind of a race going on in the ETFs market, right? Where you want, traditionally, these kind of commodity ETFs do sort of center around one ETF. And it doesn't look like that's exactly happening in the Bitcoin market, but there's really kind of two big players and then one sort of washing out with GBTC slowly depleting. And then you've got BlackRock and Fidelity in this kind of race with each other. And if you think about the game theory of that, they want to make sure, it's really important for them to grow because that enables them to have the liquidity, which enables them to grow in the future. So it's actually, they want it now, but they also need it to be able to have that kind of liquidity to be able to attract a big investor in the future. And the simple reason is, if you think about it, if you only have $5 billion in assets, you can't accept $5 billion of purchasing power on your asset. You don't have the liquidity to offer a big future investor. You need to have, the bigger investor you are, the more kind of funds you can accept. So I think you're absolutely right. I mean, when you look at, say, the game theory of it, I would expect BlackRock and Fidelity to offer it within their balanced and growth funds. Fidelity is already kind of like hinted at a little bit, because if you look at the Canadian branch of Fidelity, they have a balanced fund in Canada that includes Bitcoin as a percentage allocation. They have about 3% allocation to Bitcoin. It doesn't really affect the Bitcoin market today. But if you think about Fidelity managing about $100 billion of assets just in their balanced and growth funds today. So, okay. Well, when they add Bitcoin to their balance fund, which they will, I mean, I would put the likelihood of that happening at 99.99% chance. Like, this is a big asset manager that's proven over the years that they have a strong conviction in Bitcoin. There's absolutely no reason why they wouldn't do that. Well, that's another, depending on their allocation, but you might say that's another $5 billion coming down the road. And obviously, it's even, frankly, more for BlackRock. So, but where I see the big money coming in over the next couple of years is these kind of advisors, or these certainly like college endowment funds, insurance funds, just looking to get like tiny little 2-3% allocations, and that's just gonna all add up. Which is, frankly, it's difficult to project the exact number, but you're looking at like potentially hundreds of billions of dollars flowing into Bitcoin. And the other thing I would just say as well to keep in mind is that Bitcoin has this odd property of unlocking higher levels of capital as the market cap grows. It's like right now, even today, even though it feels like it's quite big, but it's also like it's still too small for certain pools of capital out there. There are investors out there that have so much capital that it's kind of uninteresting. Like, they can't invest it because they don't want to own 30% of Bitcoin, right? They don't want to have that kind of illiquidity. When Bitcoin is a $30 trillion asset, it's like, I can park 500 billion in there and it's fine. But right now it's not liquid enough. And Bitcoin needs to continue, just like it has in the past, right? We could never have gotten a MicroStrategy in 2014 because it was a little baby asset. Now we have these kind of treasuries that kind of be unlocked, but we're going to unlock the pension funds, and then we're going to eventually unlock sovereign wealth funds. And this is probably the final kind of stage of where it goes. But yeah, it's kind of an interesting property that it does it unlocks higher pools of capital as the market cap grows that simply just can't invest right now.
What about the question of rebalancing, right? Because we're dealing here with a lot of professional investors, and
Hmm.
many of them will have an allocation target, right? They may be using their traditional
Yep.
portfolio, strategy. They may say, okay, let's go for a 3% Bitcoin allocation or whatever, 5%. Now, of course, maybe you and I might say, maybe a conservative allocation is 80% and an aggressive one is 90%. But this is the level they're at, and let's say
Sure.
they start with 3%, and this bull cycle carries out, and within a year, that's now 10% or
Yeah.
15%. They're gonna
Look,
have to
it's
now
going.
sell some, right?
Yeah, yeah. They. I mean, you're right. I mean, that's how they're going to operate. They're probably going to create. Typically, what you do is you create bands. So you say we'll have a 3% strategic allocation, but we're fine for it to be operate sort of plus or minus 1.5%, say. But yeah, if some of these funds invest in Bitcoin and then it goes to 6%, they will. They'll trim. And that I suspect in the long run, although I don't foresee it happening like in the next 6 months, but in the long run, yeah, it's going to curb volatility of Bitcoin because these big institutional players will be literally they'll be buying the dip when their strategic allocation is sort of under hit, and on the flip side, yeah, they'll be selling their profits. You know, until we get to a situation where investors start to kind of like redenominate things in their head and they start going like Bitcoin actually is a unit of account that I'm interested in, then it gets very different. But that's such a long way away realistically for the vast majority of investors that yeah, I mean it's true. A lot of these guys are going to take a small position. Bitcoin is going to double, 3x, whatever. Then they're going to sell. And then it's just that's going to repeat ad infinitum, basically.
Yeah, interesting. And so we may see this weird dynamic of like FOMO amongst some people, and then other people are sort of rushing to sort of sell a little bit out to kind of change their position down. I also find it interesting that there's this race to get some Bitcoin now while it's still relatively cheap compared to what it should be, right, in our minds. But there's all these pension funds, insurance funds, people who, especially at a state pension level, many of them do not have enough, right? Like they just will not have enough. And it's sort of like the first one to blink is okay. Like the first few who get into Bitcoin now, they'll be
Hmm.
okay because they got some early, and Bitcoin will go up. But the ones who are late, they might just be really screwed.
Yeah. Well, look, this is one of the interesting, fascinating consequences of kind of a monetary restandardization, which is what we're going through. I mean, we just live in a pretty interesting time in history where there is a massive wealth transfer between the people that understand the monetary system is rebasing on a new money, and the people that don't understand that. It's not like it's kind of interesting philosophical. I don't know if it's fair or what, but it's just that's the world. That's the world we live in. Yeah.
And so let's talk a little bit about the actual holdings. So on your site, you've got the the ETF BTC holdings over time, and you can sort of see that basically, I mean, as I see it, Grayscale started out with 600,000 Bitcoin, and now that's grinding down over time, and
Hmm.
they've got maybe 350 or so, 350,000 ish, and it looks like basically IBIT or Fidelity, BlackRock. IBIT is BlackRock, and Fidelity, which is FBTC, have like been the real, main two horses in the race. Do you want to just comment a little bit on what you've seen there in terms of which ETFs have been accumulating the most Bitcoin?
Yeah, for sure. I mean, yeah. So as you mentioned, BlackRock. So on day zero, right? Grayscale had they converted their trust into a spot Bitcoin ETF, and they started day zero with 619,000 Bitcoin. And then you had all these other ETFs crop up. Now, the big sort of factor that's affecting the market is that GBTC previously operated on a fees basis, they were charging their customers 2% per year to hold the Bitcoin. And while conversion to ETF has a lot of benefits for them, it also brought about a whole bunch of competition where these new ETF providers are coming in, and typically an ETF is actually very cheap. Everybody else has come in at about 25 basis points, about 0.25% fees. And GBTC have decided strategically for them, they're going to keep their fees at 1.5%. And we can kind of talk about that because that's kind of a pretty interesting decision by them. But the consequence is that a lot of investors are leaving GBTC and kind of flowing into these other ETFs. And we kind of have two phenomenons happening at once, which is there's a flowing out of GBTC into these other ETFs. And we also have fresh capital just coming from people that were never invested in any of these trusts or ETFs going into it. And the consequence is that today, Grayscale within basically 2 months has gone from, a little over 2 months, has gone from 619,000 Bitcoin to about 335,000 Bitcoin. They've lost basically half their Bitcoin holdings. Now, of course, depends on if you think about it from their perspective, from a game theory perspective for them, what do they care about? Do they care about their Bitcoin holdings, or do they care about their dollars under management? I don't know the answer to that. We'd have to ask their management team. From a dollars perspective, they're not doing too badly, right? Because Bitcoin price has risen. And it's actually quite plausible that they end up with a lot more dollars under management in a year's time than they had at the start of this whole ETF cycle, even though obviously, as we can see, they're really heavily bleeding on the Bitcoin. But BlackRock and Larry Fink just went on television and said accurately, this is the best ETF launch they've ever seen in the history of BlackRock. And it is by sort of any kind of inflows metric. It just is. And in fact, the second best ETF launch of all time is the Fidelity Bitcoin ETF. So both of these guys have had a huge success. So BlackRock has had about 250,000 Bitcoin they've acquired in these 10 weeks, and Fidelity is it's not as strong, but it's it's about 144,000. So they would have to be stoked with that outcome as well. So and the other thing that's quite interesting, I would say, in terms of this market is that some of the other players have also done pretty well. I mean, I imagine Bitwise, which is a kind of a no-name brand, relatively speaking. I mean, now I think they're building a brand, but the truth is that how many people had heard of Bitwise 6 months ago? I'm going to say not many. They've got over $1 billion in assets under management from Bitcoin and growing. ARK have had also quite a nice launch in terms of allocating to sort of building at these kind of ETF assets under management as well, acquiring about 40,000 Bitcoins so far. So the market is there's basically 5 ETFs right now that kind of have significant Bitcoin holdings, and Grayscale is the big one that's falling right now. It's unclear to me. I've actually been trying to do a bit of my own kind of investigation to talking to some GBTC holders and figure out what's going on here. Are people what's going to happen to GBTC? Is it going to zero or what? Because it's very interesting that the management team have decided to have these very high fees at 1.5%. And I think that what is happening is that you have to look at the history of Grayscale, which is that they held over 400,000 coins back even from, say, September 2020. So and of course, the Bitcoin price back then is sub $10,000, so I'm going to call it $10,000. And so they would be knowing that a lot of investors are subject to capital gains tax, and selling Bitcoin now to move it to another ETF and incurring depends on the state you're in, depends on your circumstances, but 10 to 20% capital gains tax might not be worth it to save on the kind of 1% fees that you would save relative to, say, moving to another ETF. And so I imagine that's the bet that Grayscale are making, that there's going to be a lot of investors that are just not going to want to take that capital gains hit. But it's a totally fragmented market. You know, some people invested in 2021, so they didn't have all that many sort of capital gains anyway. And then there are other people that, like, they've got other capital losses. They're able to sort of offset it. Some people are selling based on principle. Like, I have talked to investors that are like, I'm just going to take, this. The thing is that it's an insult, the fees they're offering, right? It's a slap in the face to people, because people know they're kind of being screwed when they take these 1.5%.
Right. Back to the show in a moment. The lead sponsor of this show is Swan.com. Over at Swan Bitcoin, you can buy Bitcoin and also learn about Bitcoin. Now, you can do this over on the website, Swan.com, or get the Swan Bitcoin app available for your iPhone or Android. Over at Swan, you can send in your fiat using ACH or Wire, and then do either a smash buy a lump sum of Bitcoin, or set up an automated recurring purchase plan. Just regularly purchasing some Bitcoin. People call it DCA. Some people just say stacking sats. Whatever you want to call it. The safe way to do it is to buy and withdraw to your own self-custody. That way, you're not putting too much risk into some other custodian. So with Swan, we make it easy for you to self-custody. It's free, automated withdrawals into your own self-custody over at swan.com. Over at Swan, there is a range of learning material that you can use to learn about Bitcoin, whether that's Welcome to Bitcoin course, which is a free course hosted by Natalie Brunell, and I helped write some of the content. There are various shows, such as Dante Cook's daily Bitcoin show. There's Swan Signal Live, hosted by Sam Callahan, and so much more. Go to swan.com and you can find a range of services and products related to buying Bitcoin over at swan.com. This show also brought to you by Mempool.space, the leading Bitcoin and blockchain visualizer. I use it all the time when I want to get an idea of what's going on in Bitcoin's mempool. And I use it just before I'm about to send any on-chain transaction so that I can target my fee according to what's happening in Bitcoin's mempool. Now, Mempool.space are continually innovating. They're continually rolling out new features, new visualizations, and new things to understand about Bitcoin. And also, not just Bitcoin on-chain, you can see the mining tab, you can see Lightning, you can even view Liquid. There's so much stuff you can do over there at Mempool.space, and check out Mempool.space/accelerator for those of you who want to sign up on the accelerator program waitlist. And lastly, when it comes to securing our Bitcoin, we need to use physical security devices. My favorite is the devices made by CoinKite.com. Now, notably, they've got the Cold Card. This is a device that you can use to generate your Bitcoin private keys offline, and you can write down the 12 or 24 words and write down, obviously, the details there. And then you can generate Bitcoin addresses and receive Bitcoin into those addresses. And this gives you some confidence that you have created this Bitcoin address and not somebody else. And so this is also a great way to keep your private keys offline. So the idea with security is you want to keep your private keys offline and keep them off of online internet-connected devices. This is a great way to help give yourself some additional security and confidence that your coins are secure. So to get your cold card, go to coinkite.com, use code Livera. I like to use my cold card with Sparrow Wallet, but there's a range of different options such as Sparrow, Spectre, Electrum, Nunchuck, Keeper, and various others. So get yours at coinkite.com, use code Livera for a discount on your cold card devices. And now, back to the show.
These 1.5% fees.
Paying 1.5% instead of 0.25%. I mean, it's literally 5 or 6x the fee that you could otherwise pay. But like you said, there's a capital gains impact. And also, there was this premium dynamic as well. So there could have been a lot of people who were kind of they weren't like long-term hodlers in GPTC. They were just kind of, I'm in the trade because of the premium, and now that the premium is closed, I'm going to close out my position and run for the hills, right? And so it's kind of, you've got these different, I guess, camps of people, and maybe Grayscale just made the calculation of, hey, we, from their perspective, I don't agree, I don't necessarily, I'm not ascribing moral value to it, but from their perspective, they may have thought, yeah, we'll bleed people out, but it's better for us to strategically bleed people out at 1.5% than to even try to be competitive. I don't know.
Yeah, I think that's right. And the thing is that from an outsider looking in, it's very difficult to know. But the only thing I would say is that there's like an informational
Asymmetry.
arbitrage.
Yeah.
They have much more knowledge about who their customers are. They know what price points they bought at. They're in the one thing we can assume is that they are optimizing to make the maximum amount of profits over time. I think that's a pretty fair assumption. It's not guaranteed because there might be other factors at play, which we can talk about, but there is an assumption that they're kind of trying to make the maximum profits they can. And that means they're kind of figuring, they might have done some calculation and thought, you know what, we're going to bleed to 200,000 coins, but Bitcoin price 10x's and hey, our assets under management is still looking great anyway. We're going to make really good money out of this. There is a kind of conspiracy angle, which is related to the idea that this is basically like the US government has come along and essentially tapped them on the shoulder and said, we want you to wind down, because Grayscale has been involved in some pretty dodgy stuff back in the bankruptcies of the 2021 saga. And it's kind of a complex sort of financial institution there with different issues at hand. And there is some kind of idea
and,
that...
I mean, on that point, it's Barry Silber did resign as Grayscale chairman in December last year. So, I mean, maybe that's, something related. I don't know.
No, I doubt that's an issue. But, I mean, if you had the framing, if you looked at it and you went, this is an organized, orderly wind down of GBTC, and you were just watching it so far today, it's indistinguishable from that kind of worldview. On the other hand, if you said, hey, no, they know they're going to lose half their assets, but they're going to hold a good chunk and they're going to end up making lots of money out of this anyway, you can't really, it's still frankly...
Yeah, I mean, personally, I'm more in the make hay. I think they're more in the make hay while the sun shines, right? They kind of see it as, hey, BlackRock and Fidelity have shown up here. We may not be able to compete with them, on their own game, but let's just kind of strategically bleed out the customers that we can and just kind of ride out what we can. Maybe that's the way they're thinking.
Yeah, I mean, that would be very short term. If they thought they were going to lose all their assets, it would be kind of a dumb idea, because even if you made 0.25% on 600,000 Bitcoin for the next few decades, like if they didn't lose, BlackRock, I mean, I kind of put out a tweet talking about this, how like when BlackRock holds 500,000 Bitcoin and the price is $1 million a coin, BlackRock, just by their 25 basis points, they're minting $1.25 billion per year every year, and that's just like, they're not, that's just printing money basically for them. They're not doing anything for it. So, except using their brand name, basically. So there's a lot of money still left to be on the table if you project out Bitcoin over the next couple of decades. Depends what you... The
other angle that maybe we haven't brought up yet is the angle that Grayscale could be arguably the cash cow of the DCG group, right? Of Digital Currency Group. And maybe for some reason they need that revenue now. And maybe that's why they've been a bit more high time preference, arguably, let's say. I'm speculating. But it could be that's also driving some of the decision making.
Yeah, I think that's pretty good. I would ascribe a pretty high probability of that, because they've got bankruptcy, debt-related issues to sort out. So that might well just be a big factor. They might just go, hey, I can't afford to cut my revenue.
Can't afford to play the long game. Let's just make as much as we can now. Yeah, and but nevertheless, it's been a very successful ETF launch in general, especially for BlackRock and Fidelity. And it seems that the demand has been very consistent, and so I think that's quite a promising indicator that there's just like a steady, purchase or bid coming in every weekday. There's just buyers coming in across Fidelity and BlackRock, and especially I know Fidelity has this big distribution network, right? So there's lots of maybe underlying investment advisors who are going out there to their individual customers saying, hey, there's this new ETF, or maybe for years you've been wanting Bitcoin exposure. Now I can give you exposure. I can help you get exposed through this ETF. So I guess that part is promising. And so what's the scenario then if we sort of start to see a bit of FOMO this cycle, or maybe not this year, but let's say next year? What does it start to look like in your view?
Well, the interesting thing is, as you said, there's been this very consistent bid, basically, on average, about 5,000 Bitcoin coming in per day. And as you said, it's coming in because they're kind of just knocking on advisors' doors, like really old school kind of salesmanship that's actually happening right now. It's like literally, Morgan Stanley are likely to, there's sort of rumors, but they're likely to be sort of setting up their platform to onboard these ETFs in the coming weeks. And it's like piece by piece kind of unlocking it as we go. But it has created this effect of a pretty steady bid of 5,000 Bitcoin per day on average, let's say. Well, the thing is, we know the natural sellers in the market are the Bitcoin miners. They're selling 900 Bitcoin per day right now. I mean, they might be hodling a bit, but the point is they're mining 900 a day. Obviously, that in itself is not enough to meet the kind of 5,000 Bitcoin per day in demand. And we've seen sort of an immediate effect on this, right? In the sense of, in 2 months, hey, the price is up 70%. Like, I think realistically, it's kind of a grind up from here, in the sense of we see this continual 5,000 Bitcoin per day, and we see the new selling on the market. Well, miners, obviously, we know with the halving, it's going to slip to 450 Bitcoin per day in sales. And you just have this, frankly, a demand supply imbalance where at the current price level, there's more people there's more Bitcoin that wants to be bought than wants to be sold on the margins, right? Obviously, at higher prices, what does tend to happen is it unlocks kind of previously frozen Bitcoin, right? Where somebody is holding their Bitcoin. We're at 70K. Maybe I bought it at 50 in 2021, and now I'm actually like, I'm not sure about whether I want to go through another bear market, and I'm going to take my profits. And that does happen to some extent, but as a whole, what happens is just the demand, frankly, outstrips the supply, and it just starts to chew away at the price, like at the given amount of coins that can be available. And we tend to see this sort of cascading effect where I would expect a significant price rise coming this year, and really continuing as long as we see these ETF flows coming in. I do think that Bitcoin is very sensitive to macroeconomic conditions, primarily because the whole traditional financial world is basically like, when Bitcoin is, it's not a coincidence that Bitcoin is hitting its all-time high, and about the same time the stock market is hitting it. The S&P 500 is hitting its all-time high, NASDAQ is hitting its all-time high. It's not like a random, it's not a random event that these things are happening all together. I think what's happening is that there's an expectation that we will see the Fed kind of lower interest rates and loosen financial conditions over the coming year. And this really, I would expect people kind of forecast in advance what's going to happen. And if they think there's going to be looser conditions, it kind of creates it in the moment already, pumps up the Bitcoin price. And yeah, I would expect to see Bitcoin trading at sort of multiples of where we are, fast forwarding 12 to 18 months, but with obvious volatility along the way, because as we know what happens when it starts to run up, you get all these people buying 10x leverage longs, and then it becomes like just a great opportunity to liquidate them when a big whale comes along and sells, and you create these kind of cascading effects. So I would assume it's going to look a lot like prior cycles, which is just a great increase in volatility, but generally with an uptrend.
Yeah, and so I think, human nature doesn't change. And of course, it would be, maybe people could fantasize about this idea of an orderly transition, right? Everybody's going to the lifeboats in a very safe and orderly fashion, but we know that's not how it's going to happen. We know it's going to be people are going to be running for the lifeboats, and there will be people who buy Bitcoin in a way that they're not able to hodl it, or they buy an amount above their risk tolerance, right? They might buy an amount thinking, yeah, I'm ready to hold through anything, but the reality is they haven't been tested yet, and they're not ready to kind of take a 50% drawdown or an 80% drawdown, as we've seen historically. And so we'll see a lot of people who do things like sell their house and buy Bitcoin and do all kinds of crazy things. I mean, not that that's a totally crazy idea, but it's just you have to be aware of what you're getting into, and you have to be sort of ready to sort of ride the volatility, and you have to be ready for, I would say, minimum 5 years, more like a 10-year hold period. You should be thinking of it as like, I'm buying these coins and I'm hodling for a minimum of 10 years. I understand that can seem confronting for people. Well, 10 years, especially if you're new. But I think once you've been around for a while, you sort of start to understand why like having a long hodl period is a good thing. But, we'll see all kinds of degeneracy. And so that's something to be wary of. Now, we will... I think as is tradition, we'll eventually see some people start to talk about, super cycle. This time is different. It's going to be a new thing. Now, I'm curious where you stand. Are you a super cycler, or are you more like a big drawdown guy? What do you think?
Look, the way I look at it is that Bitcoin, just look at history. We've had, I think you could, if you looked closely enough at the price chart, you might be able to find 15 parabolic runs ended by a big crash at the end of it up until now. I'm not betting that this time is different. That doesn't mean that I plan on it. I'm kind of, the trouble is that I don't know, like, does a parabolic, I mean, we were at 15,000 only 18 months ago or whatever. So truth is that you could look at a 15K to 150 as a parabolic run. But that might also be 15K to 1.5 million. And if you look at the kind of bull scenario there, I don't have any kind of knowledge about what that kind of top is. So I'm not going to be planning on kind of selling all my Bitcoin and trying to predict the market top. But I do expect we will going to have a bull run, and then we're going to have a bear market following it, just as we have the previous kind of 16 runs. I think actually eventually there will be a kind of a trimmed volatility. I just think we're so, like, people have this idea that we're like kind of at the end, like sort of Bitcoin, people have an idea that like, 2013 was the wild days and 2024 it's kind of over. Or it's like now, it's like, nah, we're kind of maybe halfway through. That's kind of how I see it. We're kind of halfway through. And so it's going to be wild for a while yet. Like it will eventually, maybe when Bitcoin is kind of 10 million a coin, that's when you start to go, oh yeah, it's kind of, it's monetized.
Right, it's going to stabilize a bit then, yeah.
Yeah, but it's not, it's so far away from stabilizing that I would expect. And I also think that historical models are not that helpful, in the sense of like, just because Bitcoin did kind of 75% last time doesn't mean it couldn't do 90% next time. Like it's not like the rules don't go out, like it's not like, oh well, it's bigger, so not that I'm expecting a 90% drawdown. But I would just say that like you have to look at it from the fundamentals of what it is, as opposed to lines on a chart.
Right, right. This is a good topic to get into. And I know you've been commenting about this as well, and there's been a lot of argumentation online about this as well, because people are talking about whether it's the power law model or this other model, and the classic Michael Saylor line is, hey, all your models are going to be broken, right? Like, which is sort of, and I think what you were getting at, which I agree with as well, is I think it's more useful to think about the markets Bitcoin will go after or replace, or maybe subsume or take from, let's call it monetary premium out of stocks, property, bonds,
Yes.
gold, etc. Like it's going to suck something, quote unquote. It's not exactly precise, but it's going to take something out of those markets, and Bitcoin is going to subsume and become that. And so that's kind of how I'm seeing it. But I'd love to hear your take on that. Like I know you've disagreed with the power law model as an example. So why is the power law model, flawed in your view?
Well, look, there's first of all, I mean, there's a few different factors there. I mean, one is the power law model doesn't. A power law model might hold when you chart Bitcoin versus US dollar, but it's an exchange rate. I live in Australia, right? Like suddenly it's a different model for Bitcoin Australia, or then you get
Yeah.
if you're in
Although on that
Venezuela.
point, they would argue, oh no, the US dollar is the reserve currency of the world, therefore you should compare it against the US dollar and not against even shittier shitcoins. Like they would say
Yeah,
that, right? Otherwise, you end up with like Turkish, lira, Turkish coin, Turkish whatever the Turkish fiat coin is, or the Venezuela coin, or whatever, right?
right. So okay, so we can establish then we can all agree it doesn't work for all of the other currencies except maybe the United States. But then when you look at the United States, I mean, the problem is that we're not comparing. Like Bitcoin is although it's volatile, it's a kind of a stable system. You know what you've got with Bitcoin, but the truth is that uh, like you American system, the debt could go parabolic at any point in time. We don't. I'm not necessarily predicting it's going to happen in the next 6 months or whatever. But the fact of the matter is that there's nothing fundamentally different about the US dollar versus all the other currencies in the sense of it's not backed by anything except the confidence of the people. You can think about it like it's equity in the US government, I guess, is one way of kind of framing what the US dollar is. It's sort of a confidence in the US government system, the US dollar. That's kind of what a fiat token is. And that can only be drawn upon so long with new issuance, until you have a kind of a jump phase shift in suddenly I don't like I've gone from it's binary where we've gone from having some level of confidence to having no confidence. And that can happen, and it has happened historically certainly we've seen it with every other fiat currency in history. So I wouldn't necessarily expect the US dollar to be any different. Um, I do think that I do think it's interesting that the power law tracks as well as it does historically. I'm not kind of like completely, just, it's total crap. Like, no, it's quite interesting. But I've done like the power law modeling myself just out of my own curiosity. And the big thing, people have to realize with this is that the actual model you get varies a lot depending on like very few data points. Which is to say, if you take the price of Bitcoin and you model it out, right? And then you go, I want to start in 2012, or I'm going to start in 2011. If this is some like natural law, you would get kind of a very similar result. But the truth is that the kind of like power law model you get will tell you a very different kind of expected price depending on, I can create a power law model which says the price should be about 70K today. I can also create a power law model which says the price should be about 150K, just depending on which data points I put in the model. Like, so I'm not going to trade off this model when it's kind of, I'm drawing lines on a chart. And the other thing I would say is that these things fundamentally work until they don't. I mean, I would say that like the linear effect is important. The longer it's been trading, the more sort of confidence you can grow in it. But a lot of these same arguments could be used to be sort of fundamentally extremely bullish about Ethereum, for example. And there is some kind of validity to it in the sense of you can go, hey, look, it's a $400 billion network. So are you really going to question that, right? It's gone from nothing to a $400 billion network. Like, how are you going to say this isn't extremely valuable? But then I would say to that, I would have to go sort of delve deeper into some of the fundamental things about what might be propping up that price and whether it's kind of sustainable and all these like fundamental real factors to actually, you just have to dig deeper. And if you want to just kind of extrapolate into the future, it's a very naive way of doing it. I would also like think about something like the Terra Luna situation for back in 2022, 2021. This was a kind of a perpetual motion machine asset. And all the people theoretically said, this can't work. It's going to blow up because it's a perpetual motion machine. It's fundamentally impossible for this to sustain itself. But we had like 6 months of it getting bigger and bigger and bigger. And you would have just drawn this beautiful line on it. It's just like, this is just working perfectly.
And you had influencers shilling it and everything.
Well, yeah, of course you got influencers shilling it, but you would just look at it and go, this is just growing. And hey, I know it's not supposed to work, but it is working. And then it didn't work. And the point is that you actually have to, like, the reason why I'm excited about Bitcoin is like the really, I would start for anybody. I would say they should read like Vijay Boyapati's Bullish Case for Bitcoin. I think that's probably the best, most fundamental way of just sort of understanding Bitcoin, in the sense of you have to get to like, what are the core properties of money and what are the core properties of Bitcoin, and why does that make Bitcoin a good money, and why would that lead you to the conclusion that over time it's going to be adopted as money? And these are like fundamental properties, and not these are not, you can't chart this. And that's why I would say Bitcoin is like exciting and bullish. I wouldn't invest in Bitcoin because of a power law model, because I just think that's a really good way to get wrecked when the model breaks, basically.
Yeah, I think that's a great summary, and as I'm a big fan of VJ. In fact, VJ was episode number 2 on my podcast. We're now, what is this, 550, 60 or something now, but 500 episodes ago, he was episode number 2 on my show for a reason. And Safety was episode number 1, and so it was kind of Bitcoin Standard, Bullish Case for Bitcoin, because I saw I think those were very important, and people will look back and be like, hey, this was kind of a nicely spelled out example of why Bitcoin is going to win and why it's going to become money. But we're just early days, right? Well, while we're here talking about models, are there any other kind of or do you any other models you want to take a shot at here, or is it just kind of you'd say that same critique is pretty much applicable on other models?
Look, I think that models can be interesting in terms of guiding, for sure. Like, if somebody, I would love to see some really good models outlining, for example, looking at like a good model to me is looking at, for example, when I hear there are $8 trillion worth of assets held by financial advisors, and then as these advisors are surveyed, and then they're saying, yeah, 75% of them want to invest in Bitcoin, and we want to invest 2 to 3%. And then you go, oh, okay, maybe that a model might be saying there's $250 billion worth of Bitcoin buying there. And then a model might say, what does that imply for the Bitcoin price? That to me is an interesting model. It's not it's not a precise view of exactly what's going to happen, but it's a very logical kind of reasoned understanding about how Bitcoin can grab, as we talked about, monetary premium, or just grab energy from other investment assets. These are interesting models for me. Figuring out like what kind of asset, like what potential of the potential pool of assets out there in the world, how much could flow into Bitcoin. That's an interesting model, because then you can kind of, now it doesn't get you all the way there because we don't know what the kind of multiplier effect on the market cap is going to be, right? And that also requires a kind of a model. And so you can kind of look at historical numbers, and that's also interesting too. that's an interesting model. Like, I want to know, for example, get some kind of estimate of, oh, okay, when we had say 10 billion flowing into Bitcoin over the last few months, approximately, and it led to this sort of 50% price rise based on the relative market caps. What is that like? Oh, it's increased the market cap by 400 billion. There's 10 billion new. So maybe there's a 40x multiple on the kind of flows. That's an interesting model to me. What's less interesting is like, say, like stock to flow. That's that's a tricky one because I do fundamentally believe there is there is a connection between the halving and the price, but I also don't think you can kind of I don't believe in like
that you can chart it.
you can chart it. No, I don't believe you can chart it.
Yeah.
I do
okay, and
believe
that's a fair way to put it. I think some people also. I think Joe Carlasari made this point recently on Twitter or on X, and he was saying that many people in the financial world they use models as a CYA, right? It's a cover your ass. It's kind of like here, client, invest in this thing because I've got this model. And then if they invest and it breaks down, see, it was the model that, and it's kind of like how people go and hire a consulting firm like McKinsey to kind of rubber stamp or bless their project that they wanted to do anyway and say, see, it broke down. Well, see, McKinsey told us this was a good plan. So you can't blame me. That's kind of that's where maybe that's the context in which like models become very popular because they get written about and they get, it's like a way for giving research to clients to say, hey, here's why you should buy my product because this model says it's a good thing.
And I will say sometimes I feel bad because as a general rule, I try not to attack bullish models as a general, because I do think that there is a kind of a mimetic warfare going on here. And if somebody wants to point to a power law model that says Bitcoin is going to 1 million in 5 years' time, there's a big part of me that wants to say, yeah, that's a great looking model right there. But it just depends on like, I don't know. There is, if we're searching for truth, then we kind of have to be honest with ourselves as well. But as you said, there is a kind of element of people need a reason, like they need it because there's the famous thing there's a famous story where you can persuade people better by giving them a fake because. I don't know if you've heard this experiment.
Yeah, I've heard of this. Yeah. Like people cut in line and say, I just need to get in front. Not even give them a kind of like a nonsensical reason, and people just accept it.
If you give them the experiment was trying to cut in line, and then they've measured like someone would say, "Can I jump in front of you?" and they do it very poorly. But if they said like, "Can I jump in front of you?" and then they gave any reason at all, even it had like
it had nothing to do with it, right? Yeah.
Yeah, can I jump in front of you? Because I'd love to jump in front of you. Like anything at all. It's just some kind of because. It's like, okay. That you just increase the probability of being accepted. So if kind of some investment committee out there needs to see a power law model to invest in Bitcoin, then I hope all the analysts out there chart up the power law and present it to the teams. But
yeah. But I mean, as you said, ultimately it comes down to we're trying to seek truth and trying to be accurate. So at the end of the day, I think that's what we should aim for. One other area, just before we finish up, I know there's been a lot of chatter now about the price of MicroStrategy relative to the price of Bitcoin. And I think there was one firm who are now saying that they are going short MicroStrategy and long Bitcoin because they believe the premium is sort of out of whack. I'm curious if you have any thoughts on that, or do you think they're playing with fire?
I would say that MicroStrategy right now is trading about 2x its kind of net asset value. It's a $30 billion market cap and they hold $15 billion of Bitcoin. So in order for that to be like logical and rational, you would have to assume they can really grow their kind of Bitcoin per share consistently by a lot over the coming years in order for that to make any kind of sense. And I would say, like, for me personally, what would I rather buy right now? I'd much rather buy Bitcoin than buy MicroStrategy at this premium. But and then people can, like, as a hedge fund, the trade is very logical to me, is what I would say. Like, this is what hedge funds do, right? This is literally what they do. They look for kind of trades like this, which are odd. But the reality is that MicroStrategy trading at kind of a 2x to its NAV, I might argue, is kind of already in the bounds of irrational. And what that means, in my opinion, which means that once you're kind of disconnected from fundamentals, then you're in another world, right? Like, to me, when I look at MicroStrategy trading at 2.5 times its Bitcoin, I go, okay, well then it can trade at 5 times its Bitcoin. Because it's not like, if it was bound by its kind of net assets, it probably wouldn't be trading 2.5 times as it is right now. So I'm not, like, personally interested in kind of trying to make that trade, trying to figure it out, like, trying to buy or I'm not trying to short MicroStrategy and long Bitcoin or anything like that, because this market can get crazy. I mean, we have meme coins blowing up constantly, but the MicroStrategy, and I will concede, MicroStrategy has some kind of amazing properties in terms of the ability to add value for their shareholders. I mean, if you think about what Saylor's doing, where he's borrowing money at 0.75% and then selling at a premium to the existing share price, like a 50% premium, it kind of creates a very interesting situation where the share price is already 2x Bitcoin, basically. And then he's selling more shares at 50% above that. It's like 3x Bitcoin. So he's borrowing $1 billion at, let's call it zero, buying Bitcoin at 70K, and selling shares for an equivalent. If the share price is 1-to-1 with Bitcoin, he'd be selling shares at 180K price Bitcoin right now. Like, that's the kind of convertible he's doing, which is amazing, right? Like, that's adding so much value for their shareholders that I can look at that and I can go, yeah, that's a premium. That deserves its own premium. So should MicroStrategy be trading at a premium above 1? I would say, hell yeah, it should. Does that mean it should be trading at, 2, 2.5? That's where I go, like, come on now. Come on, that's aggressive.
Yeah. So it is a question of what price are you paying for it, and I'm also reminded of the famous saying, the market can remain irrational longer than you can remain solvent, right? So it's kind of, yeah. I mean, personally, I wouldn't play that game. I'm just obviously hodling and stacking Bitcoin, but thought people might be interested to hear the discussion about it. So let's wrap up here. Listeners, you can find Thomas and his site. It's heyapollo.com. And you can find him on X, Thomas _Fahrer. Pronounced Fahrer? Yeah.
Yeah. That's right.
Yeah. So, Thomas, thanks for joining me. And I'll catch you around.
Hey, look, it was a pleasure. Thanks, Stefan. To make any kind of sense. And I would say, like, for me personally, what would I rather buy right now? I'd much rather buy Bitcoin than buy MicroStrategy at this premium. But, and then people can, like, as a hedge fund, the trade is very logical to me, is what I would say. Like, this is what hedge funds do, right? This is literally what they do. They look for kind of trades like this, which are odd. But the reality is that MicroStrategy trading at kind of a 2x to its NAV, I might argue, is kind of already in the bounds of irrational. And what that means, in my opinion, which means that once you're kind of disconnected from fundamentals, then you're in another world, right? Like, to me, when I look at MicroStrategy trading at 2.5 times its Bitcoin, I go, okay, well then it can trade at 5 times its Bitcoin. Because it's not like, if it was bound by its kind of net assets, it probably wouldn't be trading 2.5 times as it is right now. So I'm not, like, personally interested in kind of trying to make that trade, trying to figure it out, like, trying to buy I'm not trying to short MicroStrategy and long Bitcoin or anything like that, because this market can get crazy. I mean, we have meme coins blowing up constantly, but how, the MicroStrategy, and I will concede, MicroStrategy has some kind of amazing properties in terms of the ability to add value for their shareholders. I mean, if you think about what Saylor's doing, where he's borrowing money at 0.75% and then selling at a premium to the existing share price, like a 50% premium, it kind of creates a very interesting situation where the share price is already 2x Bitcoin, basically. And then he's selling more shares at 50% above that. It's like 3x Bitcoin. So he's borrowing $1 billion at, let's call it zero, buying Bitcoin at 70K, and selling shares for an equivalent. If the share price is 1-to-1 with Bitcoin, he'd be selling shares at 180K price Bitcoin right now. Like, that's the kind of convertible he's doing, which is amazing, right? Like, that's adding so much value for their shareholders that I can look at that and I can go, yeah, that's a premium. That deserves its own premium. So should MicroStrategy be trading at a premium above 1? I would say, hell yeah, it should. Does that mean it should be trading at, 2, 2.5? That's where I go, like, come on now. Come on, that's aggressive.
Yeah. So it is a question of what price are you paying for it, and I'm also reminded of the famous saying, the market can remain irrational longer than you can remain solvent, right? So it's kind of, I mean, personally, I wouldn't play that game. I'm just obviously hodling and stacking Bitcoin, but thought people might be interested to hear the discussion about it. So let's wrap up here. Listeners, you can find Thomas and his site. It's heyapollo.com. And you can find him on X, Thomas _Fahrer. Pronounced Fahrer? Yeah.
That's right.
So, Thomas, thanks for joining me. And I'll catch you around.
Hey, look, it was a pleasure. Thanks, Stefan.
I hope you enjoyed the show. Make sure to thumbs up if you liked it. And find the show notes at stefanlivera.com. Thanks, and I'll see you in the Citadels.